Good morning, everyone. Please confirm if you can hear me. Okay, thank you so much. So I take this opportunity to welcome you to today's session, and I hope it will be an interactive one. So I'm your trainer for today, and my name is Charity Dibu. I'm part of the RWK and Associate team, mainly in the tax department. So it's an honor to have all of you. Yeah, so respecting all religion, so let us start with a word of prayer so that we can commit the session unto the Lord. So let's pray. Heavenly Father, King of glory, we come unto you, Father, this morning. We thank you so much for this moment that you've given unto us, Father. We commit this session unto you. We pray that, Father, be with us and guide us. In Jesus' name we pray and believe. Amen. So because of time, we are going to start. And once again, I take this opportunity to welcome you and kindly confirm before I begin that you are able to see my presentation. So thank you so much. So if my presentation is visible and my audio is okay, we can start. So as I said from the beginning that my name is Charity Dibu, part of the RWK and Associate team. And it's an honor to have you to be part of this training, which is a very important topic in this particular time, because this is the audit season for the KRA. So today we are going to understand the KRA audit triggers. So the what, the why, and the how. So thank you. In case you have any question, just raise it on the comment section. My team is going to assist me to answer them. And also at the end of the session, we can take a few questions. So the scope of the presentation for today is majorly to understand the tax audit. What is the audit process that we need to follow when you are tackling a tax audit? And also, what does a tax audit mean? As taxpayers, because all of us, be it either individuals operating as sole proprietors or us having limited companies, how are we supposed to handle any tax audit that is sent to us? Then also, how do we navigate in this audit process? Then another important factor and issue that we need to understand today is what are the tax audit triggers? Because majorly when you check the act, we are told that KRA might come and assess your books within a period of 5 years. But sometimes you might see that you opened a company just last year, 2024, and right now KRA is asking for documentation for the period since your inception. So what are these red flags that has brought KRA in your doorsteps? And what are the proactive measures that we need to use as taxpayers, as business people, so that we can be able to minimize these tax triggers? And majorly one thing we need to understand is that Kenya is a self-assessment regime. So we are the ones as taxpayers, we are the one who assesses ourselves and present the information to KRA for them to review. And based on the information that we have given them, in case there's some variance, then this is what will trigger. And they will want to understand, have you fully declared or complied with the rules and regulations? Then what is the tax dispute and resolution processes that we need to follow? Because remember, as taxpayers, all of us, we have a constitutional right to challenge any tax decision. So once you experience a tax audit or because of some triggers in your system, what is the next step that you should take. So let us proceed. And our objective for today's session, we have 4 main objectives. One is to understand the tax audit process. What are we supposed to do from the first step up to the last step? And what are our rights and obligations as taxpayers? Then we are also going to identify the common tax audit triggers, because we have said that Kenya, we are a self-assessment regime. So when it comes to the value-added tax, when it comes to the pay-as-you-earn return, we are the one who are telling KRA, I have this particular number of employees. I'm paying this amount of salaries, and this is the amount I have deducted them. So is that the case? That is the work of KRA to confirm that what you have self-assessed yourself is the actual position, because they expect there's no going to be any omissions or any avoidance in terms of tax disclosure. Then we are going also to understand the important documentation that we need to provide. And also, how are we supposed to stay compliant to avoid these tax audits? In today's presentation, we are going to be guided by various laws, but they are not limited to this because we have so many acts that are available. We have the VAT Act, which covers the VAT-related disputes, including assessment and appeals. So as taxpayers, we need to understand what are the rules and regulations that are set by our government. And remember, even in the VAT Act and also in the acts that are available, we have, for example, like the Finance Act 2025, which brings some changes to the VAT Act, to the Income Tax Act, to the Excise Duty Act. So we need to be updated, well updated on what is happening, so that any change that arises, we are able to implement that change within our business so that we can remain compliant and be able to operate our businesses with peace of mind. Another act that we are going to be guided is the Income Tax Act. And this Income Tax Act, it governs the dispute related to income tax, including audits and penalties. We also have another act, that is the Tax Procedures Act, which lays out the tax administration, enforcement, and dispute resolution mechanism. We also have the Tax Tribunal Act, which provides the framework for appeal against tax authority decision. We have also the ADR framework, which defines mediation and arbitration processes in tax disputes. And also we have the Tax Tribunal Rules and Guidelines, which lays out the procedure for filing and handling disputes at the Tax Appeals Tribunal. So we have also other acts like the Excise Duty Act. So all these acts, they are available online and they keep on changing from day to day. So as business people, as accountants, as taxpayers, we need to be aware on which law we are supposed to follow, so that at least we ensure that we remain to be compliant, and also to ensure that our business is operating with peace of mind. So we have said that in the tax audit, we need to understand the what. So we need to understand what they are, what is tax audit. And basically, we have the acts that define that. So what is a tax audit? That we are going to learn in today's session. Then why do these tax audits happen? And this we are saying, we have like the tax audit triggers, which triggers these particular audits. Then how are we able to navigate them successfully and stay compliant, and we do not affect our day-to-day activities? So we have some of the common myths about tax audits. So as business people, as accountants, as taxpayers, we have said that we need to be well informed on what is happening, the changes that are being implemented, because we have so many changes that are coming day in, day out, so that we can be able to accommodate that in our businesses. Then one of the myths we need, some people expect, is that only large companies get audited. But this is not the case. All businesses can be audited, irrespective of the turnover. whether you are making 100,000 per year, whether you are making 1 million per year, whether you are making a turnover of 2 billion per year, all businesses, they can be audited. So it is a myth that only large companies get audited. So then filing returns avoid audits. So you filing return, it does not avoid audit because you have said that Kenya is a self-assessment regime. And you as a taxpayer, you have your obligations. So if you have a pay-as-you-earn obligation, you are expected to file the return on time. So it is your responsibility, and you have to adhere to that. So you must file your return on time. When it comes to the income tax company, you need to be audited and you ensure that you file your returns. So filing returns, it only removes the penalties and the interest that are imposed when you fail to do that, but it doesn't make you to avoid the tax audit. So what makes you avoid these tax audits is filing correctly. So the reality is that filing correctly, it matters, not just submission. Submission is your responsibility as a taxpayer. And also you are expected to file the return correctly. The KRA expects full disclosure. Then another myth is that only fraud triggers audit. No, that is not the case. The reality is that audit can be random or routine. Then another myth is that refunds always trigger audit. Not all refunds, only high risk or large ones. So, but if, for example, you are in the business of exports and you're dealing with zero-rated supplies, and maybe you just started and you have some refunds that you need to apply, because those that deal with zero-rated supply, they are eligible for refunds. So if you apply for refund for the first time, you are going to be audited. So that is a must, just to ensure that there is full disclosure and there is ascertained that indeed you are dealing with zero-rated supplies. Then another myth is that once you are audited, you are safe for long. That is not the case. There are multiple audits which are very possible. So that means that you had an audit last year, and because there are some triggers in your system, you are not yet fully compliant. You find that immediately after you finish an audit, you have another audit. So that always happens. So another myth is that KRA targets big turnover firms only. As we said in the first myth, whereby we said that it's a myth that only large companies get audited. We have said that all businesses can be audited. So the reality is that risk factors drive audit, not turnover only. So we need to be aware of this. So these are the common myths about tax audits that we felt that we need to share with you as taxpayers, as business people, as accountants, so that it can help you to understand the reality on the ground on what is happening, to avoid these myths and not for us to be misdirected. So let us understand the definition of our tax audits and the types of assessments that we have. So we need to understand that a tax audit is an examination of your tax return by the tax authority. And here, when we say the tax authority, we are talking about KRA, that is the Kenya Revenue Authority. So it is an examination of your tax return by the KRA to verify that income and deductions are accurate. The reason they want to conduct this verification to verify that your income and deductions are accurate is because we have said that we are a self-assessment regime. And we are normally told that we need to keep our books for a period of 5 years. So if KRA asks for documentation pertaining to 2020, you need to provide for that, because the law indicates that you're supposed to keep your records for a minimum period of 5 years. And not just 5 years, because we have like the issue of legacy debt, whereby you have a debt of maybe in the year 2000, KRA is demanding you to pay 100 million or 20 million, but you do not have support documentation. So even though the law states that you need to keep your records for 5 years, you need to have an archive within your organization to ensure that you document all the documentation since inception of the company. and no document is not valid. So you're not supposed to say that this receipt is no longer in use. Just keep it, because at any particular point when there's some need for you to provide that documentation, you will have it. So we understand that this tax audit is not the one that is conducted by independent auditors. This is an audit that is conducted by the tax authority, and that is KRA. So in the Tax Procedures Act, because we have said that we are going to have some references to the acts that are there, we have 4 types of assessments. And this is in reference to the Tax Procedures Act 2015. So when we check section 28, it talks about a self-assessment. And this is where we need to note that if you have a VAT obligation, you're supposed to file that, you are supposed to self-assess yourself and file your VAT return by 20th of the following month. If you have a pay-as-you-earn obligation, you ensure that you file it by 9th of the following month. If you have withholding obligation, maybe you are a VAT withholding agent, you ensure that you file. So all this, you are self-assessing yourself. When it comes to the income tax company, you're supposed to file it within 6 months after the end of your accounting period. You need to self-assess yourself. And when you are self-assessing yourself, the information that you're presenting to KRA, it should be correct. It should be accurate. Then we have another type of assessment, which is called a default assessment. And this is in accordance with Section 29 of the Tax Procedures Act. So a default assessment, just as the name says, is whereby you have defaulted as a taxpayer. It's your obligation and your responsibility that if you have a pay-as-you-earn obligation, you file it on time. If you have a motor vehicle, for example, commercial vehicles, you're supposed to file advance tax. And we all know that advance tax is due by 20th of the beginning of the year. So if you fail to do that, then KRA can do a default assessment. So the default assessment is normally done by KRA because you have defaulted as a taxpayer to file your self-assessment return. So in the default assessment, KRA must communicate to you that they intend to do a default assessment. So another thing you need, and it's very, very important, the email address that you have registered on iTax, it should be an active email. And from time to time, possibly at each and every morning, or maybe twice or thrice in a day, ensure that you check for any communication in that particular email, so that you do not miss out on anything. Because if you receive like a default assessment, for example, it's on the advance tax for the commercial vehicle that you are supposed to file, and you have not filed, then once you receive that, you can be able to do it and avoid KRA issuing a default assessment in your system. So also it is important for us to avoid these issues. So ensure that any communication that you get, because even when they want to do a verification exercise or they want to do a tax audit on your PIN, they will communicate to you on email, and sometimes they'll also deliver a letter to you. Then we have an advance assessment, and this is in accordance with Section 30 of the Tax Procedures Act. So an advance assessment, it normally happens before the end of the period. For example, the year 2025 has not ended. So it's not possible for us as taxpayers to file a return before the end of the accounting period. So it's not possible for us to file a return before the end of the accounting period. So sometimes maybe a non-resident who had resided in Kenya, but they want to move out with no plans of coming back in Kenya, then KRA will review from the period January up to now, up to the time they are leaving the country, and do an advance assessment. So it's done in advance before the accounting period. Then we have another amended assessment, and this is in accordance with Section 31 of the Tax Procedures Act. So sometimes when you do a self-assessment, you might make a mistake, or you make an omission without knowing. or else you can also make an error. So once you identify that you have made an error, you want to correct that error. So you'll correct that error by doing an amended assessment. So also in the amended assessment, we have something else we call an additional assessment. So the amended assessment will be done by the taxpayer. But in the same, we have the additional assessment. And the additional assessment will be done by KRA, whereby they have realized that the incomes and the deductions were not accurate. So they realized that you did not accurately report your income, so you underdeclared. So based on the documentation they review, possibly they checked your bank statement, they realized that there's some incomes that you didn't declare, or you over-declared some expenses or some purchases. Then they are going to do an additional assessment. So those are the 4 types of assessment that we have, and these are in accordance with the Tax Procedures Act 2015. So it's very, very important for us to understand at what particular point does each and every assessment occur. So let us now look at the tax audit triggers. So we have said that tax audit is an examination of your tax return by the tax authority. And in this case, we are saying that the tax authority is KRA. So sometimes they will want to conduct an audit based on some triggers they have realized on your return. So 1, if there is a variance in your account salary figures and pay as you earn return, then that will trigger an audit. And by this, we mean that at the end of the year, for example, we just concluded the year 2024 and we submitted by that year, June 2025. So in our return, we indicated that we have salaries and wages worth 100 million. But maybe we did not have the pay as you earn obligation. So we are saying that we have salaries and wages of 100 million, but you do not have a pay as you earn obligation, meaning that our pay analysis is 0, but our salaries and wages is 100 million. So because of that variance, and remember the pay as you earn is you yourself who has, you are the one who has self-assessed yourself, and the income tax return whereby you have declared your expenses, you are the one who has self-assessed yourself. So in case your pay as you earn return, which you have been doing on a monthly basis, and the salaries and wages figure that you have declared at the end of the year, if it is not matching, then if there is a variance whereby your salaries and wages figure is higher than the pay return you have been doing on a monthly basis, they will want to do an audit specifically for the pay as you earn to ascertain, is it because you over declared your salaries at the end of the year? Or is it because there are some employees whom you have not deducted pay as you earn? So 1, it's either you be able to support with proper documentation. For example, you provide the payrolls, the master rolls, the proof of payment that you did incurred the salaries and wages as an employer. So if you are not able to support, then they are going to disallow that variance. So when they disallow, it means that they are removing the salaries and wages figure, and that will leave you in a payable position, meaning that if you had a profit of 1 million and they have disallowed 100 million, then you will have a profit of 101 million, which will be charged income tax, corporation tax on that. If you are able to substantiate that indeed you incurred the salaries and wages of the 100 million, then if the employees that you paid, the salaries were above the threshold, the 24,000, then they are going to compute the pay as you earn that you ought to deduct your employees as their employer. So any variance that is there, then it will bring a payable. So either way, if your salaries and wages is higher than the pay return, that variance, you might find that if you're not able to support, you pay tax on corporation tax. And if you are able to support that, and your salaries and wages were above 24,000, then you are going to pay as you earn. So you are going to be assessed that amount. So what we advise for this particular taxpayer is that let your salaries and wages and your pay return be at par. unless it's because of some casuals who do not have their KRA PIN, or the salaries and the wages they are getting is below the threshold, and that is why you have not included them. So it's also advisable that if you have the casuals, and even though they are earning below threshold and you have the pay as you earn obligation, request for their PIN and include that, so that it doesn't bring or it doesn't trigger a pay as you earn audit. Then failure to remit pay as you earn. Remember, an employer acts as an agent. An agent in this regard, whereby they deduct pay as you earn from the employees and remit it to KRA. So if they fail to remit, they have filed, but they have failed to remit. Why are they doing so? So because of that, because of non-remittance, then KRA will want to conduct a pay as you earn audit. Then failure to remit pay as you earn payment on time. So as taxpayers, we need to understand what is the deadline for filing and remitting the pay as you earn. So remember, the filing for pay as you earn is by 9th of every month. The same case, you are supposed to remit any payment pertaining to the pay as you earn on 9th of every month. So if KRA realizes that you always make your payment by 20th, they'll want to understand why do you do so. And if it is something that you can be able to substantiate, maybe you have some cash flow issues and you have just paid your employees the net, and you are able to support with proper documentation, then you'll be able to explain that. But failure to remit pay as you earn payment on time, it will also trigger a pay as you earn audit. Then need filing. So you have registered for the pay as you earn return obligation. So meaning that you have told KRA that you have got employees, but now you are filing nil. Nil to show that you do not have any employees and you have not paid any salaries and wages. Because of that, KRA will want to come and audit your employment expenses to check whether is it because you are failing to be compliant, or the nil filing is because you totally do not have any employees. The pay as you earn audit. Then significant fluctuation in pay as you earn on a monthly basis. So remember, in some instances, we have some employees who are paid on commission basis. So meaning that if an employee, the amount they got in January is not going to be the same amount they get in February, the same case for the other month, just because they are being paid on commission basis. So, and that means that there will be significant fluctuation in their monthly, on a monthly basis. Then also, we have some sectors, for example, in companies that deal maybe with avocado exportation, there's that particular season whereby you will be having employees. And when that season is over, then you are going to release some employees until the next season. So that can be able to support the reason as to why there's some significant fluctuation. And in this, you'll find that in this month, you had 20 employees. In 3 consecutive months, you have like 30 employees. Then after the season is over, you just maintain the administrative employees in the office. So ensure that in case of any significant fluctuation, it is the correct position of the company, and you can be able to support that, because that significant fluctuation is also something that is going to trigger the tax audit triggers, particularly on the pay-as-you-earn audit. Then higher director standard of living compared to declared salaries. So one thing you need to note is that as we've been looking at about the documentation normally requested by KRA, one of it is the bank statement and the M-Pesa statement. So you find that when they review the bank statement, they find that there are some monies that are being withdrawn by the directors. So if they do an analysis for maybe for a particular year like 2024, they find that the director has withdrew from the company 100 million. But the director, possibly he or she is not in the payroll. So even in the pay-as-you-earn return, he's not there. And also his standard of living, maybe he's living in a very good neighborhood, possibly maybe living in Karen, driving the most prestigious cars, taking the children to the most prestigious cars, school, sorry. Then when they check the pay-as-you-earn return, they find that the director is actually not part of the employees. So because of this, the highest director standard of living. And also when they check the bank statement, they find that there is some money that the director has withdrawn. And if the director cannot be able to support that, possibly that money they withdrew so that they can incur some company expenses, then that with director's withdrawal is going to be subjected to pay as you earn. And if the variance is coming to 100 million, the total amount the director has withdrawn from the company, if it's coming to 100 million, then 30%, which is coming to 30 million, is the amount of pay as you earn the director is supposed to be charged. So also you ensure that any amount that has been directed or sent to the director, it needs to have support documentation. If that amount was transferred to the director so that he can be able to pay an item or to pay for an expense that was incurred by the company. So it's very, very important. And then another thing to note is that we need to separate the business expenses from the director's expenses. So we have a separate account. So let the directors be on the pay-as-you-earn, or rather on the payroll. Let them, any money that they get, be subjected to pay-as-you-earn, other than the amount of money that they are withdrawing from the bank to cater for the expenses. Then higher salaries to senior employees compared to company directors. So remember, as the owner of the company, we actually expect that you are the one who is going to be the most highest paid employee. So you find that the senior employees, their salaries are way higher than the company's director. Then also that's another thing that will trigger a pay-as-you-earn audit. So once they conduct this audit and they request for those documentation and they find that there are some amounts that has been withdrawn for, by the company, then it will mean that the company, other than what he's getting, which has been disclosed on the pay-as-you-earn return, there's other amounts that he's withdrawing from the company, which has not been subjected to pay-as-you-earn. So these are some of the audit triggers that pertains to the pay-as-you-earn audit. And in this, KRA will just give you a letter and tell you that we have established some variance between your return, or because of failure to remit pay-as-you-earn return, or remitting the pay-as-you-earn return on time, we want to conduct a pay-as-you-earn audit. And we request for the master roll, the payroll, the proof of payment that the salaries and wages were incurred, the bank statement to show. So those are some of the documentation that will be requested for. And remember, the tax audit can be either 1 year or more than a year. So remember, if this issue has been happening since 2020, so the penalty will be huge. So it's advisable that if, based on this knowledge that you have gotten, go and have a meeting within your organization. Possibly you can also seek some professional help for you to align your things and for you not to experience these tax audit triggers. Then when we come to the value added tax, what are some of the triggers that trigger the value added tax? So in every trigger is basically the variance, because some of the returns are related. So when you do the pay as you earn return on a monthly basis, you are going to declare the salaries and wages at the end. The same case when we come to VAT. When you declare your sales and also your purchases in your VAT return, you need to declare the same at the end of the year, because this is not a final tax. So turnover per annual VAT return differ from turnover per annual audited accounts. So in your VAT return, you have sales of 50 million. But now, in your annual audited accounts, your auditor has indicated that you have sales of 100 million. So this variance of 50 million, is it something that is zero rated or exempt? Or is it something that is vatable as not, and was omitted in the VAT return? So based on that, KRA will actually assume that that variance is vatable, and you will be required to reconcile and provide support documentation to explain the variance or they are going to charge 16%. So 16% they'll charge when your VAT is less than the income you have declared at the end of the year. And if you do vice versa, we find that in your VAT return, you have 100 million. But in your annual audited accounts, you have declared sales of 50 million. Then they are going to subject the variance of 50 million to corporation tax and charge 30%. Then VAT refund claims. So we say that if you are a company in a refund position, in a VAT refund position, and you apply for refund for the first time, then because of that, that will trigger an audit, and you have to be audited so that they can substantiate that your refund is valid. Possibly you are dealing with zero-rated suppliers doing exportation, then you provide the support documentation. And once they are satisfied, then they are going to process the refund. So what happens in the VAT refund? You are going to lodge the refund, and the refund section will transfer you now to the audit department so that they can audit you and give feedback to the refund department so that they can process your refund. Then also failure to remit VAT. So you have filed VAT on time, but you have not paid VAT. So they want to understand why, what is the reason. And because of this, they'll do a VAT audit and request for documentation. One, they'll need to confirm that the sales and purchases that you have claimed are correct. That is, you have fully declared your income, and the expenses that and purchases that you have claimed, you have actually incurred them. That is, you have paid for them, you have the support, the proof of payment. Then consistently filing VAT returns late. We all know that the deadline for filing VAT is 20th of every month. So once we know what is our responsibility, if you have the VAT obligation, you are supposed to adhere and file your VAT by 20th of the following month. So if you consistently file the VAT returns late, then that is something that will trigger an audit. Then input VAT claims by customers or clients. So these just happened. It was prior to ETIMS. You could find that a business person or a taxpayer is just issuing ETRs. And when they just give ETRs, they are not fully being compliant. That is, you issue ETRs of like 10 million for a particular month, but when it comes to your VAT for that year, for that month, we find that the VAT you have declared, you have said that your sales was 5 million. But the sales you did, the actual sales you did, and the whereby you issued even the ETRs, the customers went and claimed the input VAT. So from the KRA database, they are able to just pick up a particular taxpayer and say that we want to know all the purchases that have been bought from this particular customer. So when they, from this particular supplier, so when they get that data from your customers and your client, and they compare with what you have been doing on a monthly basis, if there is a variance, then that triggered a VAT audit. So the same will happen because ETIMS just came the other day. So, and 5 years are not over. So even 2021, when we did have ETIMS, KRA can just pick the data and they check the input VAT claimed by customers or clients from your PIN and then compare with what you filed in that particular month. The good thing right now is that all the sales that you issue and you give an ETIMS receipt, you must declare them at the correct month. So the tax point is adhered to. So we have also to know what does the VAT Act tells us about the tax point. At what point are we supposed to declare a failure to maintain a VAT to have an accounting software within our organization, and this accounting software, it needs to give us or populate for us a VAT control account. A VAT controller account showing all the input VAT, showing all the output VAT based on the sales that we have made, and are we in a VAT refund position or are we in a VAT payable position? Then filing of nil VAT returns. So actually, the taxpayers who are filing nil VAT returns prior, most of them were placed under special table. So it triggers a VAT audit. So, and when you are in the VAT special table, it normally highlights that the taxpayer is under investigation for VAT irregularities. And one of the irregularities is filing nil VAT returns. So consistently filing VAT, being in a VAT credit position. So it means that your purchases are always more than your sales. So you being in a consistently being in a VAT credit position, that means that your purchases are more. And when you have more purchases, if you are dealing with goods, then we need to come to your organization and see that because you have purchased more than you have sold, then you have got stock. So if that is not the case, then it means that these purchases that you have been claiming, possibly they are fictitious, and they request for support documentation, that is the invoice and the proof of payment that you indeed paid for it, and also to show the stock that you have. Because also, if you do not have the stock, it means that you have been under declaring your sales. So you have been making sales and you have not been fully declaring. Then non-compliance action, such as failure to use items, it's also something that is going on. And this you'll find that the KRA officers will visit your organization, or maybe you have a hardware, they'll come to your shop and purchase the most minute item that you have, possibly something that costs like 50 shillings. And when they purchase that, they expect that you are going to give them an items receipt based on that item that they have bought. Failure to which they are going to give you a notice and they are going to summon you because you have failed to be compliant, and you are going to be penalized for that. Then industry-wide tax audit. So for example, you're in the manufacturing industry and KRA is auditing all the manufacturers. You are in the construction industry and KRA is auditing all the construction company. Then by virtue of the industry tax wide audit, then you are going to be audited. Then failure to account for withholding VAT when a company is in a VAT credit position. So remember, when you sell or you provide goods and services to someone who is a VAT withholding agent, you are going to issue them a VAT receipt. And at the point of payment, they need to withhold 2% because they are VAT withholding agent and remit it to KRA within 5 days. So if they remit and KRA does an analysis and finds that if we do all the VAT analysis, your expected sales that you are supposed to declare in your VAT return was 100 million. But what you have declared in your VAT return is less, is like 50 million. So it means that there is a variance. You have not accounted fully to all your sales. And it means that because before a supplier pays you, they will withhold. And once they withhold and remit to KRA, you are going to get a withholding certificate. So in those certificates, those are things that once you access your iTax portal, all the data is already there. So it will tell how much amount, how many certificates do I have and what amount are they totaling to. Then compared to the VAT return that you have been doing, you'll be able to find that either the amount is equal, that is, you have fully accounted for the withholding certificate, or if it is less, then it means that you have not fully accounted for the withholding certificate. So for you to be okay, either your VAT sales are more than the withholding certificate or they are equal. If your VAT is less than the withholding certificate, then it means that it's a trigger, and this will trigger the VAT audit because you have not been compliant and you are not fully declaring all your sales because of these withholding certificates that KRA is able to access from your iTax portal. So when we come to the income tax audit, the first trigger is failure to separate sources of taxable income where a company has more than one source of taxable income. So remember, when you are filing your income tax return, we have several columns. So we have the business column, whereby you need to put the P&L for the business, that is the sales, in case the stock, the opening stock, the purchases and the expenses for the business. if other than the business, you have got some farming activities ongoing, and in the farming activities, you have made some sales, then you need to separate that. Then next, you have the rental income. If you have some rentals and you are receiving income, then you also need to declare under the rent income column. Then we have another one for the interest, an interest income column. If you have received interest, then you declare it separately. And in case there's any other business that has not been highlighted in the income tax return, then you just consolidate it and include it in the other column. So what KRA says is that you are not supposed to fail to separate these sources of taxable income. Because remember, if I have a loss in the business income and I've got profit in my farming and my rental income, I'll pay tax on the farming and the rental. But if I add them, all of them, then it means that the loss that I had in the business has been set off against the other profit. So I've not paid tax on that. And remember, a loss, we can only carry forward a loss, that loss to future profits for that particular business. So it's very important for us to separate the sources, because if one source has profit, you're going to pay tax on that source. But if you combine them, then it means that you'll be declaring a loss, and that is not the correct position. So even when your auditor is conducting an audit, they need to separate and provide a P&L for each and every source, so that when you are uploading it in the income tax return, you are able to separate. Because failure to separate will trigger a tax audit. And sometimes they'll be able to see that whereby possibly you have a withholding certificate from a financial institution of some interest you have gotten. And when they find you in your return, you have combined the interest in your business, and you have declared a loss. So it means that will trigger an income tax audit. So it's very important for us as taxpayers, as accountants, we separate the different sources of business so that we pay tax and declare the loss, the actual loss for each and every type source that we have got. Then variance between annual VAT return turnover and annual audited accounts turnover. So this is like the first one I was talking about in the VAT return. So any variance, your VAT sales and your income tax sales should be at par, unless the variance is because of something that is not subjected to VAT. For example, maybe like interest. So, but in case there is any variance, then you are going either to be charged 16% on that variance or 30% corporation tax on that variance. Then reporting income tax losses into perpetuity. So KRA expect that the fact that you are in business, you are making profit. So in case they find and assess your iTax portal, and they find that in 2020, you declared a loss, 2021, 2022, 2023, all those years, you have been in a loss position. Then they will want to ascertain. You're still in business, but you are still making losses. Is it because your income is not fully declared? Is it because you are overclaiming your expenses and also your purchases? So they will want to conduct an income tax audit to assess these losses are actually true. Then deducting expenses that do not match the specific business expenses. It's very important for us not to be in the construction, not to be in the, maybe like we are a school, but the expenses we are declaring, they do not match the specific business that we are doing. So sometimes KRA normally conduct expenses audit. So they just highlight some expenses which they have seen in your return, and they want you to substantiate because they feel that these expenses, they do not match your specific business expenses. So as business owners, as the directors, you need to be aware, because sometimes you'll find that a particular taxpayer return was filed, but when KRA presents and tell them that we want to ascertain these expenses that you claimed, the business owner indicates that I am not sure of these expenses because these are not my expenses. So we need to be aware on every information. As business people, as taxpayer, we need to be aware of every information that is being inputted into the iTax portal, because that is what KRA will use against us. So you cannot say that this is my portal, but the information I have is not mine. I do not know even the person who did that, because in KRA's assumption, you are the one who has access and you are the one who filed. So reputation of the company's tax service provider, for example, a tax audit, tax auditors is very, very important, because if they realize that a particular tax auditor has been having they have a habit of maybe misleading clients or doing some stuff, then because of their reputation, the bad reputation that they have, and KRA realizes that they are your auditors, they'll want to conduct an audit based on the reputation of that tax service provider. Then gross profit margin variance compared to the industrial average. So these they'll take your sales and your cost of sales. So the gross profit that you have reported, they compare with other businesses in the same industry. So if they find that in your industry, there are other taxpayers are declaring gross profit of 50%, but in your case, you have a gross profit of 10% or 5%. And this has been happening for quite some time. So they will want to understand, is it because that you are not fully declaring your income, or is it because you are under declaring your stock and also over declaring your purchases? So any particular item that is making you to have a very, very low gross profit margin compared to the other taxpayers whom you are in the same industry, then that will trigger an audit. Then information from other tax audit. So if they conduct an audit, possibly in the construction industry, and they realize that based on how the outcome in the construction industry audit, will need to conduct some audit in this other industry, because they are maybe quite related. Then because of that information, then they will want to conduct a tax audit. Then also the issue of a whistleblower. So maybe you had an employee, they were not satisfied, or you parted ways not in good term, and they have some information, and even some of your customers and suppliers, they have some of the information they can use against you, and they do the whistleblowing through the whistleblower, then that will trigger an income tax audit because of that whistleblower. Then some of the ongoing tax audit, we have the VAT withholding. So this VAT withholding, we have said that you have some VAT withholding certificate in your system, but compared to the sales that you have been declaring on a monthly basis, there's quite a very significant variance, meaning that you have not been fully declaring your sales because they have gotten the information from the withholding certificates that are available in your iTax portal. Then rental assessment, this one is also ongoing. The landlords, the tenants. So KRA is also moving around, and they find that maybe they get the number of tenants. They are told that the building even is not vacant. It has not been vacant for quite some time. They get the rates of how much the business is being charged. So by the time they are giving you a letter, they have all the details, and they have actually computed they have actually computed how much rent you are supposed to declare, either under MRI or under income tax. Then import and export information is also something that brings about the issue of income tax audit. So they find that when they check your export information, you have exported goods worth 200 million, but what you have declared in your return is actually 100 million. Then they will want to understand why it is so. You have imported goods worth 100 million. But when they check your purchases, you have 50 million. So they are going to work backwards, because any purchase, other than something that you use to construct maybe your office or your go down, any purchase that you make, KRA expect that you are going to sell. So they are going to work backwards and compute the profit, the gross profit based on the margin that you have, and charge you for the undeclared profit. And also they are going to charge you for the undeclared sales. And remember, for the VAT, we normally have 6 months. So if 6 months has already elapsed, so something like for January 2024, even though we might have some purchases, and they have the data that we made some purchases worth 20 million, and we did not claim those purchases in our return. So they are going to work backwards and assume that we indeed sold those purchases, and they add. So if we bought at 20 million, they add a markup. So they find that you are supposed to sell at 22 million. So they charge 22 million VAT. And then the 2 million profit, they charge corporation tax. So it's also important for us to ensure that we harmonize everything and we do full disclosure. Our purchases need to match, our income needs to match, because any variance that occur will lead us to be in a payable position. Then rental audit based on KPLC and water meter information. This is something that is also ongoing. So, and this data they can be able to get from KPLC. They can also go to the water company, maybe the WASCO, NAWASCO, any water company, they can be able to get that data. So if they find that you have several meters, you cannot just have like 20 meters and you have just one house. That means that you are a landlord. Then also the issue of NTSA, they can be able to get data from NTSA. So they just provide a KRA pin for a particular company. They want all the vehicles registered. And if they find that you have like 10 commercial vehicles, they are going to compute the advance tax that you ought to pay based on that. And because of that, they are going to charge you advance tax and possibly do a default assessment because you have failed to pay advance assessment. So those are some of the major tax audit triggers, but they are not limited to this. So actually another tax audit triggers, remember currently we are using the items. So KRA is saying that we need to be compliant and ensure that we have items. So you find that a certain business person or a certain sole proprietor, they just went because they want to sell, they registered for the items. And they have been issuing out items based on the sales that they have given. But when the year ends, for example, a particular taxpayer, they registered on items last year, January. During the year, they made a lot of sales using the items. Possibly they made like 30 million. But come the end of the year, since this particular taxpayer has not been used to filing any return, they have been in the business, but they have been constantly filing nil from prior year. And now because they have started using items, they just filed their 2024 nil return. So what is actually ongoing currently is the comparison between your items return and what you indeed filed. So any variance is actually a tax audit trigger and is going to trigger an audit. So you cannot just issue items, either 100,000, 10,000, and you fail to declare that sale. So in case you did issue an items receipt, you ought to declare that sale at the end of the year and provide the expenses, which can be, you have support documentation to account for it. In case you have a profit, pay the necessary tax. So what are some of the tax stages of the tax audit trigger? One is the audit notification letter. So in this audit notification letter, they write to you that we want to conduct an audit for the period, possibly 2020 to 2024 or 2022 to 2024. So they are going to base the period they want to conduct. Then in case there's some triggers that has led to them wanting to conduct this audit, they are going to highlight. So possibly you have been in a perpetual loss for quite some time. So they tell you that we have seen that you have been in a loss position for quite some time. So we want to ascertain that this is the correct position. In the same notice audit notification letter, they are going to indicate the documentation they require. So they are going to request for the bank statement, the sales and purchases ledger, the M-Pesa statements, the director's account, the expense receipt, the sales receipt, that is the sales invoices, the purchases invoices, a lot of documentation. In case there was a loan that you declared, they are also going to indicate that. Then at the end of that letter, they are going to indicate the contact person. So if that letter was sent by charity, the name of charity will appear, the full names of charity, their phone number, and their email address. That is their KRA email address, and also the officer who authorized, that is the manager, is going also to sign at the end of that. So the audit notification letter is the starting point. Then the next stage is the preliminary meeting. You need to sit down with the KRA guys, and most probably have a representative who is going to represent you so that you can understand. And also for KRA to be able to understand how your business is. Because, for example, if you have been in a VAT credit position, possibly you are dealing with zero-rated or exempt supplies. So meaning that your VAT credit is valid, but KRA does not know what you do. So the preliminary meeting is very, very important, so that even some of the documentation that they request, and you be able to understand exactly what do you need. Then document submission. After you have had the preliminary meeting, you have got to know the person in person who is handling your issue, the documents, and the reason behind them wanting to conduct this audit or this verification exercise or this compliance check. You provide the document submission. And also in the preliminary meeting, in case the timelines is not enough, then you can request for more time. And you ensure that within that time that you have requested, you have submitted all the documentation. Then KRA is going to review those documentation and the queries. And in case there's some response, the taxpayer is required to give a response. And now after you provide the response, then you must ensure that you get a final audit finding. Possibly the final audit finding will indicate that we have realized that there are some issues, and we need to do an assessment. So we're going to give you a notice of assessment. In case there are no issues, KRA need to give you an audit finding, starting from the date they gave you the audit notification letter, the document they requested for, the documents that you provided, that is you submitted, what were the issues, and what is the finding. Then after, in case there's some assessment that needs to be done, is going to be done into the system. And at this particular point, in case they give you a notice of assessment and you are not in agreement, possibly they give you a notice of assessment assessing you 100 million. Then we say that you have a constitutional right to challenge any tax decision. And at this particular point, after you receive an assessment notice, is whereby you give a notice of objection, and after the notice of objection, you provide all the support documentation once your objection is validly lodged, and after that, you need to get an objection decision. So we are going to see those stages, and those stages are very, very important for us not to pay the taxes that we ought not to, because we want to be in operation for quite some time. So it's very, very important to understand what is our rights and obligation as taxpayers, because that is provided there by law. So some of the accounting books that are normally requested for tax audit purposes, sometimes they may not be limited to this. They might ask for more documentation. So I said the sales ledger, the purchases ledger, the invoices, both the sales and the purchases, the general ledger. So these are detailed ledger showing all the transactions. And this can be extracted from the accounting system that you're using. If it is QuickBooks, QuickBooks can be able to give you a general ledger. Then an asset register. So this is very important that in an organization, you ensure that you keep an asset register. Then M-Pesa statement, bank statement, debtors and creditors account, salaries and wages, directors account, loan statement, inventory accounts, etc. So the document they normally request, sometimes it might be more than this. So we have said that once you receive a notice of assessment, you might be in agreement to it or not. If you are not in agreement to it, then we are saying that we have a right, a constitutional right as taxpayers to challenge any tax decision that we are given by the commissioner. So if you read section 51 of the Tax Procedures Act, it's the one that guides us on how we need to do an objection. And one, it indicates that a taxpayer who wishes to dispute a tax decision shall first lodge an objection against that tax decision under this section before proceeding under any other written law. So we cannot get a notice of assessment and go and directly do an appeal. So before we proceed any other written law, we must do we must give and lodge an objection against that notice of assessment that you have received. And a taxpayer who disputes a tax decision may lodge a notice of objection to the decision in writing. So that must be in writing with the commissioner within 30 days. So once you have received the notice of assessment, you have 30 days. If you are not in agreement, to lodge and to give a notice of assessment, a notice of objection, which we have said that it must be in writing. And this notice of assessment of objection, before it's accepted by KRA, there are some conditions that need to be met. And one of it is that your notice of objection should state precisely the grounds of objection, the amendments required to be made to correct the decision, and the reason for the amendment. And B, in relation to an objection to an assessment, the taxpayer need to pay the entire amount of tax due under the assessment that is not in dispute. And in case you fail to give a notice of objection within the stipulated timelines of 30 days, you can request for an extension to file that. And also for your objection to be accepted, so that it can be reviewed, you must provide all the relevant documentation. So once you read section 51 of the Tax Procedures Act, it's the one that guides us on how we need to do our objections. So we have said that sometimes you might fail or you might be prevented from lodging the notice of objection within the set timelines of 30 days. Possibly you are absent from Kenya, sickness, or any other reasonable cause, then you need to provide the support documentation to show that. And that one is also actually in law. That is section 51, subsection 7 of the Tax Procedures Act. So when KRA receives your objection, they need within 14 days to alert you and to notify you that your objection has not been validly lodged, possibly because you have failed to meet the 3 conditions that we have seen. Then after your objection has been validly lodged and KRA reviews, then they need to give you an objection decision. And this objection decision, it needs to highlight the findings and the statement, a statement of finding on how did they arrive at that. So, and also if you receive your objection decision and you are still not satisfied. So assuming one of us here has received an objection decision and they are not aware on where to proceed, possibly the objection decision is indicating that you need to pay 100 million or 50 million. That's a lot of money unless you close the company. And if you close even if you close the company, you still will not be able to pay that amount of money. So we have said that all taxpayers, they have a constitutional right to challenge any decision issued by KRA. So if you receive an objection decision, it is your right to challenge that. And it is at that particular point, you proceed to the Tax Appeals Tribunal. So this is the process flow. So we start from the tax decision, but also before the tax decision, we saw that we received a notification letter. Notification letter, possibly a letter indicating that KRA wants to conduct a compliance check, a letter indicating that KRA wants to do an audit, a letter indicating that KRA wants to do a verification check. So once they do that and they give you a notice of assessment, which we are calling it's a tax decision. If you are not satisfied with it, we have said that you do an objection. After you have provided your objection and ensure that you meet the 3 conditions we have seen, KRA is going to issue an objection decision. And if you get that objection decision and you are not satisfied, you have a right to appeal to the Tax Appeals Tribunal. And in the Tax Appeals Tribunal, it's also advisable that you do an application to the ADR. And after you reach an agreement, then your case will be marked as settled. But if it is not resolved at that particular point, you'll get a 280 a Tax Appeals Tribunal ruling or a judgment. And if that is not is something that also you're not satisfied with it, then we have said that you have a right, constitutional right, to challenge any decision issued. So then you have a right to go to the High Court and even to the Courts of Appeal and challenge that decision. So in the appeal, we have said that the objection decision is an appealable decision, and that is something that you use so that you can appeal. So at the appeal, we need to note that once you do the application, you must pay an non-refundable fee of 20,000. There are some documents that you need to provide. And remember, because we have got timelines, once you receive an objection decision, you also have 30 days to ensure that you lodge and you give a notice of intention to appeal, and that must also be in writing within 30 days. You pay the non-refundable fee of 20,000, and also you provide the memorandum of appeal and the statement of fact, and also the support documentation. So, and remember also, for your appeal to be valid, in case there's some tax not in dispute, you must either pay it in full or you enter into an arrangement to pay the same. So lastly, based on what we have covered, do you want to be the person on the left or the person on the right? The person on the left, this particular taxpayer, this particular accountant, this particular director has got clean records. Everything is at par. There is no any trigger that has triggered KRA to conduct an audit. And in case they want to do a verification check, the documentation are available. The income in the bank is the income that has been declared in the VAT return, is the income that has been declared in the income tax return, the expenses, basically everything is at par. They have got clean records, well kept, such that even that particular taxpayer, in case they are requested to provide documentation for 2020 and for 2019, everything is there. In case there is a legacy debt, they have been requested to pay of 10 million. They say, no, this is not the case. We actually finalize that issue, and this is our documentation. Once they provide that, every record they have got is clean. In case they apply for a refund and they are audited and they provide all the support documentation, their refund is approved. So that is a happy taxpayer, a taxpayer who is operating with peace of mind. They are able to concentrate in the growth of their business. But on the right, we have a taxpayer who is always being given notice after notice. Once he or she has finalized this compliance check or this tax audit, another audit comes because the triggers are always there. They are given penalty orders. Their orders, their bank accounts have been their bank has been given agency notices, so they are not able even to get the money to pay their suppliers, to pay their employees. So their employees are dissatisfied, their suppliers are dissatisfied because the taxpayer is not able to meet this. So they have got stress and they are wondering, what do I do? Does KRA want me to close my business? Because we need to understand that KRA is one of our stakeholders. These are the people that we need to work with for us to operate with peace of mind. So just ask yourself, are you the person on the right or are you the person on the left? So it's very, very important, and it's very, very easy. If you are not able to do so, then seek professional experts. And also ensure that you do a background check on the person that you want to work with. because it's very, very important for us to be able to concentrate on our business, to operate with peace of mind. And this will ensure that all our stakeholders, be it our suppliers, be it our customers, be it even KRA, they are all satisfied with everything that we have got. Then call to action as we conclude. And before I conclude, after I conclude, I'm going to invite my team from my Accurate book, just for those customers or those taxpayers who is wondering that QuickBooks is not working for me, Sage is not working for me. I need an easy system which I can be able to navigate. So at RWK Africa got you, because we have our own accounting software, my Accurate books. And once I finalize, just don't leave. Someone will come and take you through. And if it is something that you feel that this is what I need, then that will be an honor for us, because we'll be able to help you. Then what is our call to action? Understanding is the first key, but action is key. Because we have understood the audit process, you have understand why do these tax audits come into being. How am I supposed to navigate through these tax audits? Once we are able to understand, that is our first step. Then what are we supposed to do? We are supposed to act on it. Then peace of mind in business often comes from preparedness. Preparedness with having all the documentation, keeping them safe, not throwing away any book, no matter that if it is not important now, it doesn't mean that it is not important. Possibly after 1 year or 2 years, you're going to need that particular receipt or that particular receipt book. Then verify your items compliance, because it's a major focus for KRA. Reconcile your latest tax return with your financial records, just to eliminate any trigger that will cause our business to be audited. Then also just remember that as businesses, as we want to operate with peace of mind, in case our customers and our suppliers realize that KRA is always on our door, then they will look for any means possible not to deal with us, because they will not everybody wants to deal with someone who is compliant, not someone who is going to bring problems into their business. Then it's very, very important for you to seek professional guidance. Possibly if you want your return to be checked, you can seek professional guidance for your business to be conducted a tax health check, for you to be aware that everything is okay. If there are mistakes that were made prior, then how do we correct it? Then know your records, know your rights, and never fear asking for help. That is very, very important. And lastly, but not the least, let's build a culture of tax transparency and compliance together. So we have an upcoming CEO breakfast meeting. That is, it will be training on taxation in the manufacturing sector. And the theme for this CEO breakfast meeting, it is powering manufacturing growth through strategic tax compliance. So this is a breakfast meeting. It will be between 9 a.m. and 12 p.m. on the Thursday, 21st August this year. So that is next month, a month from now, we'll be having this breakfast. It will be off Valley Road, Hurlingham, and the ticket is only 3,000 shillings, but 3,000 worth helping you to align all your records. So in case you need to book this, my IT team is going to share with us a link whereby we can book, and then our marketing team will get in touch with you. And our host will be our one and only Dr. Regina Kengori. She's the CEO at WK Africa. She will be at that particular meeting. Then we have an audit and bookkeeping masterclass. So it is our responsibility as RWK to ensure that we create awareness. So actually today, the 25th of July, 2025, we are finalizing our taxation masterclass, which we have been having since last week, Monday. We are wrapping it up today, but that is not all. In case you are not able to attend, We'll be having another one in November. But also we have the audit and bookkeeping masterclass. So in case you are interested for the online training, either the bookkeeping or the audit, it normally is done online between 7 p.m. and 9 p.m. And this will be in September 2025. So the bookkeeping will run between 8th to 12th September 2025. And the audit masterclass will be between 15th and 19th September. So in case you want the physical training, you want to interact one-on-one with the trainers, we have the same. It will be between 4th and 6th September 2025, between 9 a.m. to 5 p.m. for those 3 days. The venue will be Swiss Lenana Hotel, Nairobi. So the charges for the online class, the bookkeeping is 10,000 and the audit masterclass is 10,000. But if you take both, we give you a 25% discount off. So you pay 15,000 for both. But for the physical training, the 3 days, you're just going to pay 35,000 only. The same case, if you are interested, we are going to share a link at the end of this. So you can be able to interact with us and ask more questions and clarification if you need it. Also, our contacts are just there below. Then we have a tax health check. And this is a very, very, it's a special offer, particularly to you guys. So it's time for us to double check our tax return and for us to be able to feel confident about our financial health. So we are offering a limited time tax health check to help our business identify hidden tax risk, avoid penalty, and stay fully compliant with KRA. So some of the problems that are leading to the tax audits that we have talked about. One, is your business fully compliant with VAT, pay as you earn, income tax, ETIMS, excise duty, all those? Is it fully compliant? Are you 100% compliant? Are you confident you won't face surprise tax assessment or penalties? And are you planning a refund, objection, or an appeal? If you are experiencing this and they are not quite limited to the 3 problems that we have highlighted, just contact us and we are going to help you. So don't let tax burden you, because it's not here to burden us. So we have our advisory services. We have the advisory services. We do process and operational enhancement, system setup and review, inventory management, debt management, data and creditors management, financial management, performance management, and accounting services. So all these are in our advisory service department. We do also have the audit services department, whereby we do the statutory audit, internal audit, accounting system audit, project management audit, financial statement audit, forensic audit, and tax compliance audit. So that is our audit department. We have the RWK financial consulting. So our team of experienced accountant and tax consultant, they offer specialized range of services, which include the filing of the monthly return, filing of the corporation tax return, capital gain tax, withholding tax. We do bookkeeping, monthly account, record keeping. We have the management account, the internal audit, accounting software installation, accounting system audit and enhancement, tax compliance certificate, tax issues representation at KRA, tax audit processes, tax health check, tax training, business operation review, cash flow management, company registration, business name, CR12, annual return, and beneficial ownership. So in case you need any one of these services, there's going to be a link that will be shared, and then you can tell us which of these services you'd like. We also have our internal audit department, whereby we do quarterly review of the accounting system audit, bank reconciliation, internal control processes, tax health check, management reports and governance report, payroll review, procurement processes, payables and receivables reconciliation, cash flow projection, and budget to actual report. So that is our internal audit department. Then we help focus on growth while we handle We help you focus on growth while we as RWK Africa handle your books. So we have an excellent bookkeeping services, and our core services in the bookkeeping department is the monthly transaction entry. So here you do not need to employ an accountant. You can outsource us. We be your own accountant. We have the monthly statutory filing, monthly tax filing of returns, accounting receivable and payables reconciliation. All reconciliations are done by the bookkeeping department. We have the fixed asset and inventory tracking, payroll processing, trial balance reconciliation, monthly management report and financial, and we have got advisory and audit support from our bookkeeping department. So as I've said, we have our accounting software designed to help you as business people. If you find that QuickBooks is not for you, Sage is not for you, we have a simplified accounting software called My Accurate Books. And this helps you to simplify your accounting works. And it will be able to strengthen your customer relationship by managing all the information in one place in My Accurate Books. It easily stores detailed track purchase history and generate reports to make informed data-driven decisions. So in case you need any assistance, before I invite my colleague from My Accurate Books to just give you a brief overview of the My Accurate Book software, you can contact us. And our offices are based at, we have Nairobi office, Westlands, Dada resident along Westlands Road, Gate 83. So there you can find us, but also we do have our contact. You can contact us under 0728-897-429, or you can give us an email under info@rwkafrica.com. And also you can visit our website at www.rwkafrica.com. So thank you so much. So as my colleague joins us, let me stop sharing. I can take a few questions. So we'll be sharing our links so that you can be able to book for a consultation in case you need any one of those services. And also if you have an issue that would like an assistance, we always have a free consultation booking at 30 minutes. You can book that with us and we'll be able to assist you. So let us welcome my colleague from My Accurate Books.
Hello. Good morning. We are Tech Charity for that session. I'll take it over from here. My name is Kenyan Lele. I'll be taking you through my accurate book, accounting software. Uh, Let me share my screen in a minute. Okay, so my accurate book is available through the website, the web app, and also through the mobile app. You can download it via the Play Store. So to access my accurate book, you type in myaccuratebook.com, my accurate book form, which will lead you to this site. Yeah, then you can log in from here, register. Let me take you through this. So if you already have an account, you can log in through here. If you don't have an account, you can register through here. Yeah, so you enter your first name, last name, your business name, your email, the business email. If you want to use it's invoicing, you can toggle this button, but for now that is not yet available. You can skip that one. Enter your password, your country, where you're residing, the location, the currency you'll be using, the phone number, which you'll need to verify. Which you'll need to verify, then OTP that will be sent to you. If you have a logo, you can upload it from here. Then you proceed. Yeah. If we don't have, you can just log in. Already have an account. Try this account. Yeah. So this is how the dashboard looks like. You have your analytics, your sales expenses, your purchases, your profit or loss report, and your weekly sales, which you can switch to. Yeah. So if you want to see the records of previous weeks. Yeah. You also have the data's report. We also have the data's report on the right, bottom right side. Yeah. Okay. Okay. Let me switch my audio. Sorry. Then improvement in the audio. Hello. How is the audio right now? Okay. No audio. Are we good now? Okay. Let me try something. There's an echo. Okay, let's just proceed. So if you want to add your inventory for your products, you go to items. You have a list of your items. In this table, you can see all the items you have, the products, the services, and the stock that is low. So that is less than 5 items. If you want to add an item, you click that button, enter the item name, category, if it's a product or service, the description. Or you missed the first part. Okay, just a quick recap. After you log in, you'll find the analytics of your sales, expenses, purchases, and the profit or loss. We also have the sales performance, which can be in weekly, monthly, or yearly. We also have the data report showing you the reports ranging from over 90 days, over 60, and the total 30 TC. Yeah, you can also filter your reports. Want to start maybe from the year. Yeah, so you can see your total sales in the year can be that, expenses, purchases,
and your total profit, etc. Yeah. Okay. The items, we have in these scorecards, we have this total items, products, services, and the stock percentage. So these are the stock that are running low, sorry, which are less than 5 items remaining in the stock. If you want to add an item, click that, enter the item name, category, product or service, description, if you have the sales price, the vendor, and the tax type. You can also add the product image right over there. So once you add the item, they'll appear here. So let's probably add one image item, sorry. Let's try some right. Products. Let's say we have 110 in stock. We purchased at 120 each. The washing powder. Sorry. We'll be selling them at probably 150. The vendor maybe Sunlight. The tax type probably VAT 16%. You can add an image if you want to. Yeah. Yeah. So you can see that item has appeared on top. So we have 110 in stock, the product, an auto-generated SKU code, the price. You can decide to delete that item. You can edit the item, and you can also view the item. To edit the item stock, when you click the view button, there's an adjust stock button right here. So you can decide probably if you want to increase the stock or remove stock from your that item. You can have that stock in, enter the amount, if it's 20, and the reason, probably restock. Yeah, then you click that button, adjust. Where did we stop sharing the screen? Sorry about that. Okay. So what about now? Okay. So we can continue. Yeah, so we were talking about adjusting the stock. There's a button right here. When you click view item, this icon right here, adjust, and choose whether you want to stock in or stock out, enter the amount, the reason, click OK. Yeah. We added 20 in stock. We have 20 more. So those are the activities you can do in the product or service category. The items. If you want to bulk add items into inventory, you can download a template. Click download. You get this template. So you fill your items using this template, like that. Add all the required items. The required items that have a star next to it. After finish adding the items, After finish filling up your Excel, you upload it. You choose that file, select that Excel, then you upload it. Yeah, that easy. So we can move on to the next step. Let's move to customers. Manage your customers by adding them. So initially you have a default walk-in customer. Once you create your account, you will have this by default walk-in customer. So these are for the customers that are needing to add the details. You can just click that button. You can decide to either add an individual customer or a business customer. Fill in their details and add them that to your CRM database. Yeah. The next part is sales. So I'll show you how to make a sale. So making a sale is easy. So you click this button right here and make sale. You come to this part where you have to select your customer, your item, product. So let's say we want to sell these two items, sunlight and Paro cement. Click, select them, add the selected products. You choose their quantities, probably for these two. You'll see their subtotal right here. Select your customer. Let's say Scholastic and Jerry. If we add a discount, consider right now we have no discount. Let's give this powder a discount of probably 20. You see that discount will be calculated right there. So you can decide to pay now or pay later. So for pay now, you generate a quick receipt. Payment method, let's say M-Pesa Pochi. But if you want to add your new payment method, you can click that. So you can add other bank account, M-Pesa, till number, pay bill, right there. That way, since we have one, you can use this one. Enter the reference number of that transaction or payment. So let's say it starts. If it's, you can add a receipt date. So if you want to backdate your receipts, you can use this option. So if you enter a date that is behind, it will be backdated. But if you don't add any dates, the receipt will pick up the exact dates that you're creating the receipts. For that, you can complete this cell. You get this beautiful receipt right here. You can decide to print it if you are connected to an X printer or any form of receipt printer. Yeah. So we can go back to sales. I can show you making another cell. So this one you can have maybe these two. Let's select our customer, Kennedy Mburu. We pay later. You can add the payment method, probably M-Pesa Pochi. Add any reference number. The payment due date, probably that. The delivery date, if you wish to add. You can add the payment terms if you want to, that is optional. And if the customer has paid a deposit, you can add that. Not you leave it like that. So we have that amount. Let's create the invoice. So you'll get that invoice preview. You can print it if you want to. So this is how the receipt looks like. It has your logo that you had uploaded while registering at the top right. Yeah, So we have that, the issue date, the invoice number, all the details that you have, the payment details. That is done. We can proceed. Let's return to sales. So you can, quick actions that you can do, you can change the date ranges, view the receipts that are from different dates. You can filter them using this one, paid, unpaid, or partial. You can also decide to reprint a receipt or download. You can delete an invoice only if it has not been paid. But once it's paid, you cannot delete an invoice. Sorry, editing an invoice. You cannot edit an invoice in payments. You can create a credit note. You can issue a credit note. You select, enter the quantity, the reason, probably expired. You add that and create that credit note. You see, that deletes the amount that has been credit noted. Yeah. So let's move on to quotations. So you can easily create a quotation. Same process. Select the item, the quantity, the customer, and the payment method, expiry date. That easy. So once it has been created, you can download the quotation and send it to your customer. Or, okay, once the customers approved the quotation, you can create an invoice out of it. So just click create invoice. This will generate a quick invoice for that quotation without going and creating another invoice. So you generate, you can see it has created the invoice number 57. The previous one was 56. Yeah. When you go to invoices, you can see that is the invoice. Yeah. Moving on credit notes, you can see a list of the credit notes that you issued over time. Yeah. Receive payments. So this is where you receive the payments that were paid using pay later, meaning it's a date. So once the customer comes and pays for that payment invoice, you come here, receive payments. You can collect any payment. So probably this, click pay now, enter the payment method, if it's M-Pesa, the status, they're paying fully or partially. Yeah, you can enter the reference number, any notes, and complete the payment. So once it has been successfully created, it will be deleted from this unpaid invoices. On the purchases, making a purchase order, we have that. So this is where you create a purchase order. Select your product that you want to order, probably that. Select your supplier, or you can add a new one. The terms. You create that purchase order. The purchase has been approved. You can just edit it here. Change the status to approved. So once you approve it, it will be created into a purchase that will be recorded in the system. So no need of creating another purchase, going to record another purchase. So you can decide whether it's an invoice or receipt purchase. If it's an invoice, meaning it has not been paid. Yeah. you want to add another item to that purchase, you can do that by adding another item right here. Save the changes. So you can see this status has changed into approved. When you go to the purchase section, you'll find that purchase has been recorded. It is 20 shilling. You can issue a debit note on that purchase, meaning whether the item was spoiled or you want to return it to the supplier, and do that. You can issue a debit note. Simple as that. Yeah, you can also record a purchase directly without creating an LPO right here. Same process, add the item, select the supplier, the invoice type, whether it's an invoice or receipt, the receipt number. Submit. Okay. Yeah. Then you save that purchase. Simple as that. So you can see it has been paid fully since we selected the invoice purchase type. Yeah. When you click the debit notes, you'll find the list of your debit notes that you had created right here, and you can also download them if you want to. Yeah. Here we can find the list of which you can also add or import. You can pay the purchase. So these are for purchase that you had bought from the supplier, but you had not paid for them. Yeah, so you can just simply click pay now. For example, this one, M-Pesa, probably it's a full payment. The date has been entered, the reference number. Yeah, just complete the payment. So that will purchases. Yeah, this table. Yes, so that is that. We also have expenses. So if the business has expenses, which it has, and add your expenses into this page. Yeah, just add the expense, choose the category. The category is not listed here. You can create a new one. So it's an office expense, insurance, salaries, etc. You can just add your expenses right there. Let's add one, probably an internet expense. The amount probably 4,000. It's paid or not paid, and edit that right there. Enter a description, probably office internet. Save the expense. Yeah. So you can decide to download the past expenses report. I believe so. Yeah, by that button. There's an error. Let's try this. So you can download the PDF. This is how it looks like. So that summary, the total transactions. Yeah. You can also have the top 10 categories by spending, top 10 vendors, the top 10 highest expenses. All the breakdown that you need for your business is included. Yes. So moving on to other reports, we also have the inventory report. We have the inventory report. We also have the cost of sold report, products, So you can print this and get all the products that are listed in your inventory. Let's try that. Yeah, so this is your inventory report. It has all the inventory summary. Yeah, so you have your products and their quantity listed, all of them. Yeah, moving on. You have the profit loss statement. So you can decide to download it. So it has a breakdown of your revenue, all the sales from invoices, sales from receipts, the cost of goods sold, the receipts, item cost, the gross profit, and then it subtracts the operating expenses. So the total operating expenses is that. So the net income is that. So you're in profit, I believe so. You can toggle the range selector and download the Excel or PDF. So we can try the Excel. So this is how it looks like. So we have that summary. You can also get that item sold summary. Yeah, beautiful. Okay, so you also have the data report. So anybody that is owing you owe is listed there. So these are the list of your customers and their debts. So for example, Ruth Mushiri has a debt, an outstanding debt ranging 30 days. It stays for a long time to come to this part, 60 days moving forward, and also get the total. That's for everybody. So yeah, you can also download that, the PDF and Excel. Same for the creditors. You owe your suppliers money, you get that. That is good. You also have the sales report. You can get a report summary of your sales in this part. You can decide to download the Excel or the PDF. You can try the Excel. Yeah, so this is how it looks like. That's your logo or the summary. Every breakdown that you need. So you can get the amount that was paid using M-Pesa, the transactions made, total amount, yeah, the top selling items, and the customer analysis, the detailed sales report, the list selling items, everything that you need. Okay, moving on. We also have the user management. So if you have people working for you, probably salespeople, accountants, etc., you can add their details here. So you can add probably their details. Let's say, from here, add my name. You can assign them a branch if you have branches. If you don't, it will pick up the headquarter and assign their role. It's an accountant, cashier, salesperson, or an admin for that matter. So let's pick the accountant. You can also give them system permissions. So if you want them to access the inventory, click it, sales, customers, the branch management, user management, etc. And you create that user. So you can see I've reached the maximum number of users I can make for this plan. Yeah, but that's how it is. So yeah, So once this user logs in into the system, they will only access the permissions that you've granted them. Nothing more, nothing less. Moving on, we have the branches. So these are the branches that your business has. So if your business has more than one branch, you can just add it here. Yeah, so you add the branch name, the location, the phone number, etc. So once a user is assigned to a specific branch, they will only be able to view the items that are that branch, the items and the sales that they will make will only apply to that branch. The reports for that matter will only be for that branch. Unless you're an admin, you can view the reports for all the branches. Yes, that's about it. We can move on to that. So we have our plans of the business profile. Okay. So we have our plans. That is where we upgrade. So if you want to upgrade to probably the standard package, quarterly or yearly, click that, click upgrade, choose the M-Pesa, enter your phone number, and pay with M-Pesa. You will receive a prompt, make your payments, and you will be upgraded accordingly. Yes. So if you have questions about that, be happy to take them on. So let me see. Just a minute. Okay. Yeah, so I can see Benjamin has raised his hand. Maybe you can proceed and ask your question. You can unmute, Benjamin. That was not a mistake. So yeah. Maybe I can speak about Mwenga. You can ask your question. Unmute.
Hello.
Hello.
Can you hear me?
Yes, hear me.
Okay. This is Benjamin.
Okay. Benjamin.
I have 3 observations to make.
Okay.
One from your presentation.
Okay.
I didn't see where, for instance, a customer, you can be able to generate a statement of account. Does your software supports that? Number 2.
Okay. Sorry, before you proceed.
Sorry.
Okay. Okay, just go on.
The next item is from your dashboard. I would
Okay.
probably was looking to see maybe you incorporate an asset register, because
Okay.
if it's supposed to be a complete accounting system, then we need to make sure that all the necessary or prerequisite accounts or ledgers for accountants are actually there.
Okay.
And then I was just maybe suggesting from your sales report or purchases report, is it possible to include a section where you can have maybe if you've sold maybe to 20 clients, and those 20 clients, we have those with PIN numbers and those without PIN numbers. Can we have that part as part of the detailed sales report, so that if someone is doing VAT reconciliation, whatever you have in the system for the customers with PIN numbers should also be the same when it comes to iTax.
Okay.
Just a
Okay.
suggestion.
So that is
Yeah.
that's in the sales and purchases report.
Yes.
Oh, okay. Okay. On your first
Yeah.
question, you had asked
The statement of account.
a report. So that's a customer report.
Yes. For
I
instance,
think we have that. Let me show this. Tell me that is it. Is it something like this? Probably try somebody else.
Yeah, something close to that.
Yes, so you have the reports for a customer.
Yes, in terms of
per
the
customer.
invoices that per
Yeah,
customer.
they have done. Oh,
Okay,
yeah, you
okay.
can actually.
Okay. It's
You
just
can,
coming under the name. That's okay. All right, thanks. That's all. That is a good job.
Okay. Thank you. Thanks for that, Benjamin. We also have Dixon. You can unmute this, Dixon.
Can I go?
Yes, you can.
Yeah, so my question is, can you import some of this data either from Excel or other accounting packages so that you're not starting from scratch?
Yes, that was not put into consideration. So you can import items, customers. So you cannot start from scratch. So you can import your items using this button. You can also import customers if you had, and also probably think your supplier can also import your supplier, unless there's another data that you wanted to import. Dixon.
Hello, Kennedy. Good afternoon.
Yeah. Good afternoon.
Yes, I've seen the way you have shown us. I like the system. Yeah. Kindly, how can we get in touch? We discuss more about the same. Then another thing. Yeah. How somebody can get the system. Then another thing, yeah. If, for instance, you want to invoice to another currency, like dollar currency, do you have that provision?
Currently, we don't have that provision.
Kindly consider that also.
But we can consider it here. The system keeps on improving day by day from the customer feedback that we get daily. So we put such into consideration.
Okay. Kindly, okay, now you will tell us how we can get in touch so that we can.
Okay, so you can reach us. You can reach us on our number
Yes.
0116
011
6
I lost you.
0116
6. Your internet, I think I've lost you again. Hello, Kennedy, are you able to hear me? I think there is network issue.
One 3 000. So
I've
our
not
number is in the
managed.
chat.
Okay, in the chat,
Walter.
yeah. So thank you.
Yeah. You're welcome.
So thank you so much.
Thank
Hello.
you. Thank you. So,
Hello.
Hello.
Kennedy, you can hear me?
Yes. Yes, I can hear you.
I'm asking. I have a question.
Yes.
I'm asking, for example, I am dealing with an advertising company. Then I buy, okay, I'm sure you, on your way to work or whenever in town, you've just seen these billboards. One of the films, ni Magnet Ventures. So, for example, I'm buying those roads, hizo chuma. Those roads, chuma ni kilo. The chuma ni kilo. You see those things zinajengwa na chuma.
Yeah.
Nimebuy those chumas. You see, I'm making purchases and I'm claiming input tax on those purchases. Then I am going to assemble that thing and build that thing, because that one billboard, a stand, ile in kwa road, it costs around around 1M plus. Actually, around 1.5.
Okay.
Am I going to do capital allowance? That is now my asset. Is it going to be? Am I going to classify it, and claim capital allowance on it? Because the things that the chumas that I've used to tengeneza that billboard, I've claimed the input tax on it. So if I assemble it, it's like two parts of the vehicle, then you assemble that vehicle and you're using it within your company. These are an asset within your company. Am I still going to claim allowance on it as an asset, as my asset? Because these are an asset that I've built, because it's going to be there for quite some time, maybe 10 years either.
Okay, so I'll get somebody to answer that question.
Okay.
Yeah. Maybe.
Hello, kindly come up again on the question. On the issue to be the capital allowance.
I said, I do billboard. These billboards on your way to work on the road, all over the road. Like for example, the Magnet Ventures, they are all over on the road, on the buildings. I buy nanunua chuma. Hizi chuma, you see, hizi chuma, I'm claiming input tax on it. Hello?
Yes. I'm hearing you. Continue.
On the purchases to make, you see, I'm buying this chuma specifically. Ili kutengeneza this product into a final product so that I can now be able to sell to the customers.
Yeah.
And the chumas na claim input tax under VAT. Now nikishatengeneza nichomele hizo chuma ni mount, then niende niweke kwa barabara. That is now my asset. That is an asset that I'll be using now to get income. Because I rent it out on a monthly basis. Customer can rent for maybe 5 months and analipa akimaliza tunatoa tunaweka mwingine. Am I going to claim capital allowance on that billboard yenye nimetengeneza na hizi chuma zenye nimekuwa nikinunua, and am I going to classify that billboard now, the complete one, as an asset? Itakuwa in my asset register.
Yes, so it needs to be in your asset register. So it's part of your assets. So, and if that is the case, then you can claim the capital allowance on that. But I'm sure you include it.
The materials that I've used to make that thing, I have expensed them.
Okay, if you have expensed them, then you should not claim for capital allowance unless you capitalize them.
So I need to capitalize those the small, because those chuma unapata chuma ina cost kama 200 nini kama 100,000. But then at the end of the day, to mount that thing, the whole of it goes to almost 1.5.
Okay, so it's either you expense, so you claim the expenses, or you capitalize and you claim for the you go for the capital allowance. So, but if you have expensed, then you cannot claim the capital allowance.
Also, I have to go for one. If I have expensed, I don't need to. I won't go for capital allowance.
Yes, because you see, for both they are meant to reduce your tax liability. So if you expense twice, you expense and now you also capitalize, you'll not be accurately reporting your books. And when they come to review, it's either they remove it from your expenses and just treat it as a capital asset and capitalize, or you just expense and fail to include it as part of your assets. I think you need to come up with a capitalization policy with or within your organization on what you need to expense and what you need to capitalize.
So the best, because if I expense, and then it means I'm not going to put them as part of my assets.
Yes.
Okay. Thank you.
Okay, thank you. Back to you, Kennedy.
Hello. Hello. I'm hoping you've been answered. So anybody with any other question regarding my book? Kenyan?
Hi, Kennedy. Hello. Hello, Kennedy. Can you hear me?
Hi, Lina. Yes.
Hi. Now,
I can hear you.
this system,
Yeah.
can it work for construction companies? Because construction companies work based on projects. Can project accounting, like you have one project, every expense and revenue for that project is classified under that project. You finish, you close, that is a closed account. Then there is another project. So can it work for construction companies? Do you have construction companies that are using it?
Not really. We don't have. I don't think the system can accommodate that. Opening and closing a project. Yeah. Yeah.
Is that something that you can consider? Because construction companies are really suffering getting an accounting system that actually aligns with their nature of business. And I work for the construction industry. We are using Excel. And Excel is not going to give those ledgers.
Oh, okay. So probably we can consider that, put more research on it, see how it can be worked on.
kindly,
Yeah.
that would be much appreciated.
Probably you can leave your contact, so when we need to make that system, you can
Okay.
have your views on that. Yeah.
Okay. Okay.
Yeah.
I'll do that.
Okay. Anybody else? Alfred? Any other question?
Kennedy, how are you?
I'm good. How are you?
I'm also good.
Yes.
Thanks for the presentation, although I joined late, yeah?
Yeah, you're
And I
welcome.
think I think my question has been just answered. Because I was also asking about which specific, is it for specific industry? Because I'm seeing mostly supplies, sales and whatever.
Yeah.
Because some of us are in financial institutions. So I don't know if you can work for such a industry.
Yes, we can look out for it. Yeah. Maybe work on it in our future updates.
Okay. Secondly, how much does the system cost?
The system costs 500. It's a registration subscription-based model.
Okay.
So monthly subscription, yeah, or a quarterly, half year, or yearly.
So it's
so for a year it costs about 5,500.
For the first payment?
The first payment 500 shillings only.
500 shillings or 500,000?
500 shillings.
Oh, okay.
Yeah, there are different packages.
Okay. Thank you so much. Have a good day.
You're welcome. You too.
Okay.
Dixon, who else? Yes, Daniel. Daniel, you can unmute. John, anybody can go first.
Hi, I have a question.
Yes.
Somebody asked if you can generate statements of account. I didn't get the response. Kindly respond to me.
Sorry, statements of account.
Yes.
I don't think so, but we are working on it.
Okay.
Yeah.
Good afternoon, Kennedy.
Good afternoon.
I was asking a concern. Does the system support transfer of stock, maybe from one department or from the main store to the sale point?
Yes.
And also, can the system be integrated with other software? Because like those, I don't see how it supports the hospitality industry, more so in the sale point and the front office. So can it be integrated with other softwares?
So for the first question, the stock transfer is available. On the second question, that was for integration, that is not available yet. So what will, if I have a question for you. Hello?
Yes, please.
How will you need to integrate the software to another software? Specifically in your industry.
If you go to the if you go to the hospitality sector, mostly if you look at QuickBooks, it's mostly integrated with the other hospitality sector software, whereby the QuickBook cannot support the front office module like booking in, customer reservations, and also the restaurant sale point. So it integrated that the accountant export them to the QuickBooks software for the accounting purposes.
Oh, okay.
Yes.
I understand you now. That is
and
not
also, how is this software different from the online QuickBooks?
Well, for a start, our software is simplified for our users so that anybody without an accounting knowledge can be able to use our software. Yeah. Have I answered your question?
Yes.
Okay. So there are no other questions. Was there registered people were signing? So before you leave, there's a register you're supposed to sign for your attendance. Make sure you do so. Yes. So if there are no other questions, we can end it there. Thank you for your time. My name has been Kennedy Lele. Yeah, goodbye.
Goodbye.
Bye. Bye.
Goodbye.
Omagino ting'o nade?